Welcome to a brand new trading week, a 5-session set. And one of the questions we're going to ask ourselves is whether a crash is possible. And I need to just clarify this. I'm not here to forecast a crash. I'm not here to scare you. I'm just want to kind of put the idea out there that we need to always be looking at both sides of the coin. You know, I know there's strong earnings and all these things happening, but there are other things that we have to look at as well. So kind of being able to see both sides allows us to be a good risk manager, which is really the most important part when it comes to trading and investing, is that risk management part. So could a crash happen? Of course it can. I mean, it always can. Of course, the question is, what's the definition of a crash? Well, a crash, at least by my definition, is a very sharp downturn. Usually lasts at least a few days, and it doesn't really matter how deep that move is, but I think it's more like you know, how steep it is. So like, for example, a typical stock market correction is somewhere between 5 and 10%. Textbook, and a more of a bear market is like a 20% peak to trough kind of move. 20% plus, I should say. So to me, the crash is more sort of the velocity of the move. So, well, the thing this week, and that's the reason why I chose the title that I chose for this video, is we have some very large tech earnings, or at least stocks that until just recently were considered tech. Some of them have moved into this new communication services sector. So let's have a look at that, because I think this is really what this market continues to be focusing on, is some of those very big names. So let me show you guys the what I wrote down here. You can see Microsoft is set to report earnings this week, Amazon, Google, and Intel. That's just some of the big ones, but these are the big ones. That comes out to about $2.7 trillion in market capitalization. So Microsoft about 830, 840, Microsoft 860, Google 770-ish, between, I think it's like 765 or something like that. Whatever, you know, that's why I wrote sort of a round number. $2.7 trillion in technology-ish or technology-related types of stocks reporting earnings. So if we kind of juxtapose that to where we are right now in the Nasdaq 100, these are all Nasdaq 100 stocks. In fact, they're all in the top 10, probably, definitely the top 10. That is a bit of a cause for concern. So let's have a look at a couple of things here, just to give you a bit of context around all this. This is the Nasdaq 100. And you can see that so far, the Nasdaq 100, from the peak in August, September, whatever that was, to just a couple of weeks ago, week and a half, whatever, was about 10%, roughly speaking. And right now, we're at that red line. I don't know if you can see that. That's your 200-day moving average, where we bounced off also earlier this year. We bounced off it pretty much, you know, several times now. So what we have is, we also have this line up very nicely with this very simple support line. Now, again, I don't want to overly complicate things, but I'm trying to show you that if these companies don't have what it takes to get new investors committing, or more investors committing new fresh capital, I don't think it's unfeasible to see a corrective move that's more closer to 15–20%, which is what this represents, as opposed to the 10% we've already seen so far. Now, is that a crash? I'm not sure, but I think it would happen pretty quickly. I think we would probably see a move. You know, maybe we kind of bounce a little bit more, but ultimately it would probably happen pretty quickly within a matter of a few days. And so, you know, again, I'm not talking about the market completely melting down forever. In fact, I still think a year-end rally is very likely. But I just kind of wanted to put it out there as an idea, because of these tech earnings that I just talked about here a minute ago. You know, I think it's important to keep in mind that, you know, when you have so much market cap concentrated in basically a few stocks, then when those stocks don't see an acceleration in top and or bottom line, it's going to be difficult for investors to really commit new capital. So I think there is a risk, and we see a shock in those stocks, which brings down the broader market, and ultimately maybe we probably quite likely rally again at the end of the year. But that's a topic for another day. We've been discussing that quite actively with our members, of course. So I hope this is helpful, folks. Just a little bit of context to start the new week. If you like this, give us a thumbs up, like down below. Any comments or questions as well, leave them down below. Have a great start to the week.